Hi, my name is Fulton Abraham Sanchez. I am the CPA of the firm FAS CPA Consultants. And today we're going to speak about how real estate investor will get 20% qualified business income deduction. In December 2017, President Trump signed a tax reform that created a 20% business deduction for S corporation and LLC. In this 20% qualified business income deduction is applicable for all these pass-through entities that distribute or that report the income, the profits of the business to the individual investors. This 20% qualified business income deduction is only applicable at the individual return level. Once the company give up or distribute the K1s to the real estate investors, the real estate investor at the individual level will report the profits of the company in their income and will be able to take 20% qualifying deduction based on some details and limitations. In terms of tax principle, the first one is that to be able to claim this deduction, real estate investors need to demonstrate 250 hours participation in the business, and they have to have records to prove it. This is critical. They need to provide a journal, records with all the activity that they have through the years, make up to 150 hours or more to be able to claim this deduction at the individual level. Related industries also will favor by this activity in the tax reform. For example, mortgage origination income is also applicable for taking the 20% deduction, as well as real estate, mutual funds, and investment trust. These related type of real estate investment, they also participate in the 20% qualified business income deduction. Now, at the individual level, there are some limitations in terms of income. For the individual, single $157,000, and for the couple, $315,000 of income, meaning that below these limits, the investor will be able to claim the 20% deduction. If the income of the individual investors go beyond this limit, then they will have to claim not the 20% business qualified business income deduction, but the 50% of the wages of the business. This is critical, and this is why the IRS requires that even if there is no employees in the company, the owners of the company, the investor of the company, they need to report W-2, they need to have wages at the level of the S corporation and the LLC to be able to claim this deduction, because if there is no wages and the income of the individual investor go beyond $315,000 for couples and $157,000 for individuals, they will not be able to claim this deduction because there are no wages. If there are wages, they will be able to claim 50% of the wages. So when the income level are beyond the ones stipulated in the reform, the tax reform, to take this 20% deduction, then there is no more 20%. It is the 50% of the wages of the business that they need to report payroll. In addition to that, for the commercial real estate, there is a safe harbor, meaning that when there are commercial real estate companies, they will not be able to be combined. They need to have separate books. They also need to have a record for the participation of the investors, of the owners of the investment, for at least 250 hours in a year, and to have records for that. In terms of reports, those records mentioned for the 250 hours, they need to be detailed in terms of hours, day description, and also the person who is doing the record, the person who is doing the service, and that person is the one that will be favored with the 20%, should be the same. They also need to file 1099 forms, meaning that payment for all the vendors of the business need to be filed through a 1099 form where there is $600 or over of expenses. And finally, triple net basis is not applicable, meaning that for all those real estate investment activities that lease or have tenants that pay all the expenses, then there is no 20% qualified business income deduction. If you want more information about related topics, you can check our channel here on YouTube. If you have, you can also subscribe if you want to receive more videos about real estate investment. And if you have a specific question, you can click on the link in the description box of this video and send us an email, FastCPM Consultant.